Bitcoin has taken a big step towards becoming a more legitimate asset. Chicago-based CBOE began trading futures contract in the virtual currency on Sunday, and that has made the price of both the futures and the underlying Bitcoin surge. The futures contract expiring next month opened at $15,000 per Bitcoin on the CBOE and in about 4 hours rose to nearly $19,000. That's a gain of more than 25%. A futures contract is an agreement to buy or sell something at a predetermined price at a specified time in the future. They were originally used by farmers to protect themselves against swings in the prices of agricultural commodities. But they are now used by investors to both hedge against price volatility in a wide range of assets, including currencies and stocks, and to take bets on where prices will go. Meanwhile, the price per actual Bitcoin also surged, rising 19% to more than $16,500 per unit. That may seem like a lot for any other asset or commodity, but for the highly volatile virtual currency, it's a pretty typical day out. So joining me from London for more on Bitcoin is Craig Erlam. He's a senior market analyst at brokerage firm OANDA. Welcome to Money Talks. As always, Craig, great to have you. So futures trading off and running for Bitcoin. Explain briefly how investors can use Bitcoin to hedge themselves against the volatility of Bitcoin or to speculate.
Well, this just provides another source of liquidity effectively, but as you said earlier, it provides a more legitimate source of liquidity. I think there's two things which I think many Bitcoin entrepreneurs were hoping for over the course of the next 12 months. The first one was Bitcoin futures, which we've now stumbled upon and will become a greater pool of liquidity when CME launches next week and potentially NASDAQ next year. And the other one is an ETF or an exchange-traded fund, which will now allow more retail speculators to speculate on the price movements of cryptocurrencies, including Bitcoin. So I think we're halfway there. And I think what today has shown, really, is that it hasn't had a major impact on what's happened with Bitcoin. Like you say, we saw a huge move early on in the session, but that's just something we've become accustomed to recently in Bitcoin. There was fear that the potential to short Bitcoin and bet against price rises could cause short-term losses or medium-term or even long-term losses in the cryptocurrency, but we haven't really seen that. So another regular day in the Bitcoin world, or what would be quite an extraordinary day in any other.
For any other asset. Now look, Craig, I mean, anyone who's studied economics will know about the tulip bubble of the 17th century. In fact, we've got a quick graph of how tulip prices fared from about 1636. And now look, here's an interesting parallel. In 1636, just a year before it fell off a cliff, basically, they introduced futures on tulip prices. Do you think we're seeing an eerie similarity with Bitcoin here? Are we headed for the cliff as well as Bitcoin?
I think people are always trying to look for past examples of when we've seen similar price action. When you're looking at something like this, we've seen it with the stock market run up until the last couple of years. People comparing it with things like the 1929 crash, always trying to look for examples when we've seen similar rises. And of course, the most obvious one to compare it to is the tulip crisis that you've mentioned. I think the biggest thing that you can compare it with is just the sheer price moves. We've seen a huge speculative bubble rise as a result of the price moves. Simply being, people have seen the rise in prices and want to get a piece of the action, and that was very clearly evident in the tulip bubble all those years ago. I think the only difference which we actually have here is that Bitcoin is actually built on a revolutionary technology and something that could drive a surge in cryptocurrencies in the coming years. So I think while there is similarities in what we've seen in prices and speculation, I think there's a lot more underlying the Bitcoin move.
Craig Erlam, OANDA, thank you very much indeed.